Hi everyone, in this video I'm going to do a deep dive into Meta Platforms' third quarter earnings conference call to try and answer the question, what's going on with Meta Platforms stock? What's really causing the stock price to fall as hard as it's falling in 2022 and more specifically in the second half of 2022 so far. So let's get right into it. Here we have CEO Mark Zuckerberg's opening remarks where he comes out saying, "We now reach more than 3.7 billion people monthly across our family of apps. I have to say that our product trends look better from what I see than some of the commentary I've seen suggest." So this is Mark Zuckerberg directly addressing the concerns about Meta Platforms stock and the decreases, saying, hey, look, I see the trends that I see internally are much better than what I see here, all of you analysts out on Wall Street talking about how bad our business looks. He's saying that he doesn't see that. Like, it's better than what the commentary out there suggests. So he goes on to say, on Facebook specifically, the number of people using the service each day is the highest it's ever been, nearly 2 billion, and engagement trends are strong. Instagram has more than 2 billion monthly active users. WhatsApp has more than 2 billion daily active users. So, I mean, billions of people use Facebook's products on a daily basis. This is incredibly positive for Meta Platforms stock investors, regardless of the near-term headwinds the company is facing. And addressing that, Zuckerberg says that we believe that we will return to healthier revenue growth trends next year. In 2023, we're going to focus our investments on a small number of high priority growth areas. And three of the primary areas we're going to focus on are artificial intelligence discovery engine that's powering Reels and other recommendation experiences, the ads business, and the messaging platform, and their future vision for the metaverse, and the latter one being the most significant cost drainer in terms of investment. And here he goes on to say, we expect Reality Lab expenses will increase meaningfully again in 2023, with the biggest drivers being the launch of the next generation of our consumer Quest headset and hiring that has been done in 2022, but for which we'll be paying the first full year of salaries next year. So they've already invested more than $10 billion in building out this metaverse, in combination the hardware and the software, and 2023 is going to be another year of increasing spending there, and the mismatch between slowing revenue growth and increasing investments is causing earnings to fall off, and this is primarily what investors are so fearing with Meta Platforms stock, is the simultaneous decrease in revenue and increase in expenses is a risky bet right now. If you're investing in Meta Platform stock, you've really got to be bullish on this metaverse investment playing out to be worthwhile, right? Because they've spent at least $10 billion already. They're going to spend another $10 billion in 2023. So that's already 20 something billion dollars invested, and they're not going to end those investments there. This is a multi-year, probably a decade-long investment into this next generation area for Meta Platforms, and so you've really got to be bullish on that side of the business to want to be an owner of Meta Platforms stock. Mark Zuckerberg says there's now more than 140 billion Reels plays across Facebook and Instagram each day. That's a 50% increase from just 6 months ago. We believe that we're gaining time spent share on competitors like TikTok. So they're taking back some of that share in popularity that TikTok has gained in recent months and recent years. So even with the progress that they've made, this shift towards Reels is a $500 million quarterly revenue headwind with this shift, but they expect it to be a more neutral pace over the next 12 to 18 months. Last quarter, Instagram Reels had crossed a $1 billion annual revenue run rate, and they're scaling monetization across Instagram and Facebook, and the combined run rates across these apps is now $3 billion. What this means is that when consumers were interacting with Facebook and Instagram's more legacy channels like photos and stories, Facebook was able to monetize those at a higher rate than it's now monetizing Reels. And so as consumers are spending more time consuming Reels, short form videos, Facebook is earning less revenue from that time spent. However, that's not going to be the case for the long term. They're fixing this issue over the next 12 to 18 months, where the monetization on Reels is going to equal what it was on stories or images and other types of interactions, right? So while shift is happening, it's costing them $500 million in revenue per quarter. But once they ramp it up, once they ramp up monetization, it's going to be a neutral impact. It's not going to be a headwind anymore. One positive sign is that all of this investment in the metaverse, both the hardware and the software, some of that is going to deliver some products. And they just announced the Quest Pro, which they just started shipping. It's a new high-end virtual reality headset that delivers high resolution mixed reality. So this product will deliver some incremental revenue to the company and bring some customers onto the platform. It'll also attract some developers to create products for this new headset and the surrounding economy that will evolve around that, and it'll slowly build up this metaverse reality that Meta Platforms is investing in. So we're going to see an initial sneak peek into the potential for the metaverse. Still, Mark Zuckerberg is decreasing expectations, saying that this is a massive undertaking and it's often going to take a few versions of each product before they become mainstream. So don't expect this product to be mainstream just yet. Okay, moving on to the CFO, David Wayner, who discusses a few items talking about total revenue was down 4%, while total expenses was up 19%. And so this is what I talked about earlier in the video, how that mismatch is not pleasing to investors. They hired 3,700 people in the third quarter, which is less than the 5,700 in the previous quarter, but it's still a lot of hiring. And in fact, since this announcement was made, Meta Platforms updated investors saying that they're actually going to have widespread layoffs and they're going to slow down hiring even more. And what I found interesting this quarter was that Meta Platforms made their first debt offering, and they went into the bond market and they borrowed $10 billion. This was the first of its offerings. And you can understand they're spending billions of dollars in these new initiatives and expanding headcount. At the same time, revenue is falling. And so they wanted to shore up some cash on the balance sheet to deal with these pressures. Still, daily active users on Facebook were 1.98 billion, which was up 3%, or in other words, they added 54 million daily active users year over year. It's impressive that they're still adding this quantity of users despite the fact that they have nearly 2 billion. Where are they finding this kind of user growth even at this scale? It's truly impressive that they're growing and expanding their user totals. And consistent with their expectations, the headwind to year-over-year revenue growth from Apple's privacy policy changes diminished in the third quarter as they lapped the first full quarter of the launch of iOS 14.5. So last year, late in the second quarter, in the middle of the third quarter, is when Apple rolled out these privacy policy changes. And now that Facebook is lapping those changes, that's going to become less of a headwind. It's not that revenue is going to jump for Meta Platforms. It's just that when they compared their results to the previous year, now though that the previous year is also going to include these headwinds. And so the comparison is not a mismatch between when Apple's privacy policies were not in effect and with the quarter where the privacy policies were in effect. And so if they're comparing both quarters where the policy is in effect, then that's not going to show a significant decrease in revenue because both quarters are, the revenue is depressed year over year. Okay. Here's an interesting point. In the third quarter, the total number of ad impressions served across their services increased by 17%, and the average price per ad decreased by 18%. The year-over-year decline in pricing was primarily driven by impression growth, especially from lower monetizing surfaces and regions. So I will end with this point here. The fact that more of these ad impressions are coming from lower monetizing surfaces and regions is bringing down the average price per ad. As you might imagine, advertisers are more interested in gaining the attention of wealthier consumers. And so if more of the consumers that are engaging with Meta platforms are from lower income regions in the world, then marketers are not going to pay as much. They're not going to be willing to pay as much to gain the influence of those users, right? Because you want to gain the influence of buyers that have more money, all else being equal, right? So you're willing to pay more for users that spend more money, all else being equal. And so this is why in the most recent quarter, Meta's average price per ad decreased substantially, is because most of those impressions were being served in lower monetizing regions. Okay, so that's all I've got for this Meta Platforms stock earnings call deep dive. If you gained some value from this video, please go ahead and hit the like and subscribe button. It'll help me make more videos like this one. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/parkev to get your 10 stock picks now.